A very happy Diwali to all my viewers and fellow traders. I'm keeping this video as brief as possible, but this is going to be an information packed video, so in case you fast forward, you're bound to miss something. Also, this should serve as a good demo for some of the content which I teach to my course students about how to derive a story around a trade. There's a tradition amongst investors and traders to buy some stocks on a Muhurat trading day, which are held onto and sold on the next year's Muhurat trading day, while repeating this process year after year. While selecting the stock for this year, the first concern for me was valuations, basically the price to earning multiples. A higher price to earning multiple is not necessarily bad for the stock, but it does mean two things for me. One, the stock price has already discounted near-term earnings, and two, in case of a market-wide shakeout, they can always correct to the higher range of the fair price, which increases the risk for an immediate fresh entry. For example, stocks like Dixon, Affle or IRCTC, which are already trading at an astronomical price to earning multiples, had to be excluded. In layman terms, a lower price to earning multiple on a good business equals to relatively lesser market risk. The second concern for me was growth. The primary intention of this investment is that the stock should be prone to give good returns in the next 12 months. For this, I needed a company which is steadily growing and which belongs to a sector having lesser headwinds. Getting to the company, I was able to filter out PSP Projects. It's a construction or a development company from the real estate sector. In size terms, it's a lower range mid-cap company with a market cap just a little short of 1900 crores. The current trading price of this company is at 526 rupees and change at NSE. It has about 228 crores of cash against 81 crores of debt. As mentioned earlier, the first concern is valuations. This company currently trades at the price to earning multiple of 14.5, which is not expensive. I know what you're thinking. Having a lower PE doesn't necessarily mean it's a good company. Well, you're right. So let's head to the next screen. On the upper half of the screen, what you're seeing is the price chart of this company from its listing day. And on the lower half, you're seeing the PE chart of this company from its listing day. Both are set to match the same scale. What this comparison means is the company's earnings per share increased over time, which is represented by the blue columns, while the stock price of the company remained in a range, thereby steadily increasing the intrinsic value of this company per share. What this also means is if there is a market-wide shakeout and the stock price, let's say, touches the level of 300, so with the current EPS levels, the price to earning multiple will be about 8.5, which is super cheap. In case if that really happens without any fundamental change in the company, high chances are that this company will bounce back right away. Moral of this explanation is, as per current scenario, the downside seems limited to me. Now, the second concern was growth. This company has been awarded the second fastest growing construction company in the small category consecutively for the year 2019 and 20. FY21 had pandemic problems, otherwise it was probably a hat trick. The reason it doesn't get talked about so much is because it's still relatively a small size company. Even recently, they've been getting orders right, left and center. The current ROCE of this company is about 21.8, and excluding this year, the last 3 years average ROCE falls in the range of 34 to 35, which is actually great. The only fallout factor I can spot currently is that one of the promoters recently sold some of their shares. The reasons are still unknown to me. But as the promoter group still holds about 70% of the company, I don't think it's much of an immediate concern. The plus point, on the other hand, is that Abacus Mutual Fund, managed by Sir Sunil Singhania, very recently purchased shares of this company from open market. So in case if I have missed out on something important, I'm sure him being a marquee investor must have thought it thoroughly. Now getting to the technical point of this video, that is the chart of the company. We're looking at the weekly chart of PSP projects. The stock has already given a breakout of a smaller ascending triangle pattern with volumes and is currently trading inside a larger ascending triangle pattern. Considering its growth trajectory, I don't expect any serious resistance if and when it attempts for a fresh breakout. As usual, this time too I gave it as a task for my co-students, and one lady student was able to spot the possibility of a diamond pattern. It's not completed yet, but certainly a possibility. Now, if there is a trade, there must be targets too, right? So I'm aiming for a minimum level of 668, which is nearly 26% upside from the current market price. Also, considering the way and the speed at which this company is growing and taking some hints from the recent conference call with the company management, I won't really be surprised if it touches the level of 950 before Diwali of 2023, which is about 80% upside from the current levels. That's PSP projects for you. In case you haven't already, don't forget to subscribe. And if the video was informative enough, make sure to share it with other traders too. Thanks for watching.